Okay, now let's take a look at exercise 5-5. So this business uses a predetermined overhead rate of $23.10 per direct labor hour. The rate was based on 12,000 estimated direct labor hours and 277,200 of estimated total manufacturing overhead. So they actually give us the 2310 here, but it's basically the 277,200 divided by the 12,000. That would be the predetermined overhead rate. The company incurred actual total manufacturing overhead of 296,000 and 12,600 of total direct labor hours during the period. So this was what they estimated, and this is what they actually incurred during the year. So we need to determine the amount of manufacturing overhead units, manufacturing overhead applied to units of product during the period, as well as the amount of over or under applied overhead, and then prepare a journal entry to dispose of the over or under applied overhead. So again, the predetermined overhead rate is based on estimates that they determine at the beginning of the year. Then that estimate is based on a cost driver, and here it's based on direct labor hours. So this would be the 12,000 estimated direct labor hours would be the denominator. The numerator is always estimated total manufacturing overhead. Then during the year, as this 12,600 hours were applied, then we would have, my solution's on the other screen, one second, here we go. So the 12,600 hours were used. As it was used, we would have applied the predetermined overhead rate of $23.10. So the total manufacturing overhead that would have been applied during that year was $291,060. We're told that $296,000 was actually used. So we only applied $291,060, whereas $296,000 was used, so we didn't apply enough. So therefore, overhead was underapplied, and the amount is the difference between the two, so $4,940. So not enough manufacturing overhead was applied. So the journal entry now that we need to do to dispose of that underapplied overhead is if it had occurred during the year, that extra amount would have been moved over to cost of goods sold. So now we're going to do it now and get that entry in there for the year. So the total amount of manufacturing overhead, because you'll be left with that balance at the end of the year, that amount is going to be moved into cost of goods sold. That's what we do if it's underapplied. If it's overapplied, we do something else. But for right now, for underapplied, that would be what your journal entry would be.